I think there could be a nuclear, and by nuclear I'm using a metaphor here, a nuclear card that China could use vis-a-vis gold, but also that the US could use vis-a-vis treasuries. And either of them would destroy the integrity of the US dollar and the whole fiat currency system that we have as a whole.
Over the past 3 trading sessions, gold had started to show a strong bearish bias, posting a decline of more than 5%, largely due to heightened market volatility. However, buying pressure has re-emerged today, increasing the price by more than 1% in recent hours. This rebound is mainly driven by new statements from China, which have confirmed that the ongoing trade war is far from over. As a result, gold is once again benefiting from its role as a safe haven asset. With a contrarian lens and historical perspective, MarioInnecco decodes complex financial events for the average investor. In a striking insight, Innecco refers to China's potential nuclear card, revealing its massive true gold reserves, possibly over 30,000 tons. He explains this move could shatter global confidence in the US dollar, positioning gold as the dominant store of value over fiat currencies. Meanwhile, China's gold reserves stood at 73.7 million ounces as of the end of March, up by 90,000 ounces from February, data from the safe showed on the same day. This was the 5th straight month the central bank increased its gold holdings. Reflecting on the market, MarioInnecco warns that China may retaliate against the 104% U.S. tariff by dumping U.S. treasuries, putting pressure on the already strained debt market. He notes rising interest costs are worsening the situation. Despite U.S. claims of tariff gains, he says the impact is minimal compared to potential treasury losses. The sell-off of U.S. treasuries is accelerating, causing the 30-year bond yield to rise at the fastest rate in 40 years. Since bond yields and prices move in opposite directions, this means U.S. Treasury prices have plummeted unusually. It is speculated that China is selling U.S. Treasuries, prompting Besant, U.S. Treasury Secretary, to warn that China's sale would contradict our goals. Ultimately, Innecco underscores that if markets discover China holds far more gold than the U.S., the dollar's value could plummet. Now we present the clips of MarioInnecco's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
There's a lot of speculation, of course, that the Chinese could be fighting back this 104% tariff, which is crazy that the U.S. has imposed as of today on China. They could start unloading treasuries, and that hurts the U.S. Treasury, of course, because they have debt up to here. And the cost of paying that debt, paying the interest is rising. It's risen since Friday. It's risen, well, if we take 4.5%, that's $65 billion since Friday. And I saw a comment from the White House or President Trump that they're making $2 billion a day from tariffs. Well, that's a drop in the ocean compared to the moves in the Treasury market. So, yeah, there's that old saying, the best laid plans of mice and men often go awry. And that's one thing that I noted a few days ago in one of my videos, that, yeah, you can tinker with tariffs and say, oh, we're going to get this from this country, from that. But you can't control what countries are going to do. They're not part of the domestic United States. They can react whatever way they want. But I think there could be a nuclear card that China could use vis-a-vis gold, but also that the U.S. could use vis-a-vis treasuries. And either of them would destroy the integrity of the US dollar and the whole fiat currency system that we have as a whole. Maybe that's the intention of the Trump administration. He did say some months ago that he wanted to obliterate the national debt. Well, how do you do that? Well, you destroy the currency. Maybe that's the plan. Maybe that's why China has been buying so much gold. And talking about gold right now, that's one of the cards, the nuclear cards that China has, is to reveal to the world how much gold it actually has. We've got an official figure of 2,290 tons, which is a joke. And this is not me talking. It's analysts like Alistair McLeod Ronan Manley, Dominic Frisby, many other people have done a lot of research about how much gold, China produces a year. China is one of the biggest producers a year, and the fact that they never export any of the gold. And some estimates put China's gold reserves, be it from the central bank and state-owned entities, and this is not counting the public. They put the reserves at over 30,000 tons. So it's weird that as far as the U.S. goes and their reserves, there's always a doubt that there's a lot less and that it's not there. But with China, it's the other way around. So their nuclear card, vis-a-vis this whole tariff war, is coming out and saying, we've decided to tell the world that we have X amount of gold. It's not the 2,290 that the World Gold Council reports. And why would that be bad for the dollar? Well, because the anti-dollar is gold. And if your major economic competitor has 32,000 tons and there's doubt whether you have 8,000 tons, you can bet that the dollar is going to get hammered. The price of gold will go through the roof, and that's how that's reflected. The collapse of the dollar is the move up in gold. So that's the Chinese nuclear card, and they could have used it maybe years ago, but I think the Chinese are they're very good negotiators, contrary to maybe President Trump's belief that he's the top guy in terms of getting a deal. I think the Chinese are they've got a lot of experience over the millennia.
Market analyst MarioInnecco warns that the public remains largely unaware of how close the global economy may be to a 1930s-style collapse. He argues that the fallout could be catastrophic if the post-World War II financial system is dismantled abruptly, especially due to rising trade tensions and the potential unraveling of U.S. Treasury credibility. Trump is focused on zeroing the U.S. trade balance, meaning every dollar that leaves the U.S. should be matched by a dollar coming in. The issue is that this approach ignores how global trade works. In the 1930s, the Smoot-Hawley Tariff Act deepened the Great Depression. The Dow Jones had already fallen but dropped another 80% after the act. Global trade shrank by 65%. The U.S. acknowledged the mistake only years later, and a new president reversed course. Based on fundamentals, Innecco urges owning physical gold and silver as chaos brews in global markets. He states rising prices are early signs of investor awakening and warns that if the U.S. freezes China's treasury reserves, precious metals could become virtually untouchable. Let's get back to the interview.
As I said, I think the public is totally asleep, not just in the United States, but here in Europe, to what's going on and how serious the situation is. Some people are talking about the possibility of a 1929, 1930s style crash and depression. That's possible. That's very possible, because if you destroy this global system that we've had since 1944 and since the beginning of the century with China and WTO, if you destroy it overnight, it's not gradual. It will mean loads of bankruptcy, and the top bankruptcy, of course, will be the U.S. Treasury. And that's another reason why you want to have physical gold and silver. And I mean, I can't emphasize how important that is to have some of that outside the system, because, yeah, it's not going to get better. And as I speak today, here, it's 8:22 a.m. London time. Gold is at 3,045, up $62. So maybe people are starting to wake up. I don't know. Maybe not. It's up 2%. We've got even silver coming up now. It's up 1.85% at 30.37. The stock market was down a lot more earlier on. Right now, it's kind of just lower by very little. But for example, the Dow future got down to 36,690. We're now at 37,550. So it was down like almost 1,000 points earlier. And I expect continued volatility. I think there were some comments here from Chinese officials that they one of them is China urges dialogue with the U.S. to resolve trade disputes. And I also saw China Foreign Ministry on U.S. tariffs. The U.S. continues to abuse tariffs to pressure China. China firmly opposes this and will never accept this kind of bullying. So there we go. We'll have to see how President Trump responds. And I think he's not going to budge because if he does, he'll lose face and he'll lose, of course. So what else is there that I wanted to speak about? Let's have a quick look. Oh yeah, on the freezing of reserves. Yeah, the United States did that to Switzerland during World War II. And Switzerland was a friend. Well, technically neutral, but a friendly country. So it's not out of the realms of the possibility that they might think of freezing China's treasury reserves, but that would be really, all hell would break loose in the financial markets, in the currency markets, and gold would be unobtainium. I think gold and silver.
Gold's bullish structure has remained intact in recent months. Since the beginning of 2025, the price has formed a steeper upward trendline, breaking the psychological barrier of $3,000 per ounce. Officially, China claims to hold approximately 2,300 tons of gold, but Jan Nieuwenhuis believes the figure is closer to 5,000 tons. With China steadily increasing its gold reserves and possibly preparing to reveal its actual holdings, could this be the moment that gold challenges the US dollar's dominance on the world stage? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.